Welcome to this Lexis PSL webcast on environmental insurance. This is an essential topic for anyone who deals with contaminated land in transactions or development projects. I'm delighted to be joined by Duncan Spencer, Director at IDIA. Duncan is an environmental insurance consultant and broker. He knows the industry very well and he's prepared a series of practice notes for Lexis PSL. Duncan, a very warm welcome. Why do we need environmental insurance?
Well, environmental insurance is for providing protection to clients from liabilities associated with pollution and environmental damage. These liabilities can be statutory, civil or contractual, and the pollution or environmental damage could have happened in the past or in the future. There are two main types of policy. One's fixed site that insures liabilities for the property, and the other one is a contractor's liability policy that provides protection against pollution caused by a contracted operation.
You mentioned contractors' policies. Let's look at a typical development scenario. An environmental consultant has carried out a site investigation. They have, say, £2 million professional indemnity cover. A remediation contractor then does some cleanup. They've even more insurance, say £5 million PI. The various parties in the transaction will be offered collateral warranties to have the benefit of both these reports. So what are the risks here and why is contractors' pollution liability insurance important?
Well, the client will often rely on the warranties given by their contractor, but those warranties are only as good as the giver. And they're only as good as the work that they've carried out. So the warranty only provides protection against whether or not the contractor has done the work that he said he would do. The insurance policies, on the other hand, actually ensure, well, whether or not the contractor did what he said he was going to do, but more importantly, whether or not there was a liability there in the first place. Another issue that sits in with this is professional indemnity insurance. And again, often professional indemnity insurance policies are relied upon. But you have to remember there, to protect the consultant, you have to demonstrate that the consultant was negligent before you could make a claim against them. A really good case is Sandridge. Sandridge was a chemical works that caused pollution, bromate contamination of drinking water 2-3 miles away from the site itself. The chemical works was developed into a housing project, and the consultants and the contractors at the time did work fully in line with best practice at that time. They got planning permission and everything went through fine. It was only because the water company started analysing for bromate that they discovered this pollution was there. Responsibility for that contamination now lies with the owners of the site.
So let's turn to a transactional scenario. I have a client buying a contaminated site. The environmental report highlights all sorts of risks, but to make matters worse, the seller wants an indemnity from the buyer. So how can environmental insurance come to the rescue?
Well, we would use a fixed site policy to respond to those kind of scenarios. The policy would provide protection against statutory and civil liabilities, as you'd expect, but also the contractual liability, either replacing or backing up the indemnity. The insurer would provide a limit of millions of pounds, and they would provide the policy for a period of 10 years.
That sounds great, but is it expensive?
Reassuringly so, I always find. You have to remember that the insurance policy is designed to provide a promise to pay. In 10 years' time, you want to be able to go to the insurer and say, I want my £10 million back. There's always going to be a cost associated with that.
Okay, let's take another example. A petrol station is being redeveloped for residential housing. There's known contamination, so liability risks for both sides. In this sort of scenario, what sort of insurance package would you recommend?
It's important to remember that an insurance policy can't cover known liabilities. So the fact that you have a petrol station that needs cleanup, you can't insure that. But what you could insure is the off-site liability. So has this pollution affected neighbours of the property? So we phase the policy reflecting the development project. So to begin with, we insure off-site liabilities. During the development project where you have the remediation contractor working, we'll provide a contractor's pollution liability policy. What happens if he makes it worse, for example? And then when the development is complete, we'll add on the on-site element of cover now. And then when the site is, even if it's sold on in the future, we'll even add the new owners of the property onto the policy for free.
Okay, a third common example would be environmental liability transfer. Something we're very familiar with. We are acting for industrial or chemical clients. They want a clean break. The site is grossly contaminated. In fact, they're giving it away for free to a buyer. So the environmental lawyer would put in all the normal protections, sold with information, indemnities, maybe a guarantor. What are the risks here, and why is environmental insurance needed?
Well, I see there are three main types of risk. The first one is financial risk. Even though you might be giving the site away for free, is the person you're giving the site to capable of responding to it? Are they going to be there when the claim comes in? The second one is, well, what happens if the pollution has already caused damage to somebody and you just haven't received the claim yet yourselves? And then the last one is the ability to respond. So first of all, it's having the money to respond, and then secondly, it's actually having the competence to respond. How do you deal with that phone call that says, I've got a problem on my neighbouring site? One of the cases I'm working on at the moment is a chemical works that's been sold on to a multinational company. Unfortunately, the multinational company has gone bust, and the site is now being sold in parts by the administrators. The administrator wants to sell a segment of the site to a solar farm developer. The trouble is that this piece of land is the old landfill for the chemical works. Now, the administrator doesn't have any information, is providing no indemnity, and so all this liability is being transferred to the solar developer. The solar developer is actually quite a temporary entity. All they intend to do is actually sell their business on at some point in the future themselves. The original polluter, the original chemical works owner, who relied on selling their site to the multinational, all of a sudden has no protection against what's going to happen in the future. None of the indemnities work now because, well, the company's gone bust. The insurance policy would be there to protect them from those liabilities.
Okay, probably after that there'll be people watching this thinking, okay, we may try environmental insurance for the first time. What are some of the practical points? Would you need a phase 2 report, or if there's an existing desktop or phase 1, can you get a quote from that?
Well, it's important to remember you are required to disclose all available information to the insurer. It's not for the insurer to decide whether or not you need to disclose it. You have the responsibility. So if you have a desktop study, or if you have a phase 2, even if it doesn't paint a particularly useful picture, you still need to give that information over. But after that, the insurers rely on, actually, what have we got already? It's very rare that we actually ask for additional information. Now, there are some exceptions to it. If you have a particularly bad site, so it is a landfill site or it's a gas works, or if you're intending to develop the petrol station, there is an expectation that the insurer will want you to do a phase 2 before you take out the policy. One of the roles of the insurance broker, though, is very early on, we can start determining what the premiums are going to be and what the policy would look like with very low amounts of information. So actually, you don't have to go down too far a route of obtaining more information or spending too much time without knowing that the insurance is going to give us the answers that we were looking for.
And how long does this whole process take?
Well, it's as long as you've got. It could be 24 hours, it could be 2 weeks. They tend to take 4 to 6 weeks, but that normally is because we're waiting for the transaction to go ahead and it gets delayed under its own steam.
Okay, would it not be the case that the insurance companies will put in rafts of limitations and exclusions into these policies to basically try and not make them work?
Every contract has exclusions and limitations to it. Although with an insurance policy, the insurer is obliged to treat their customers fairly. So the exclusions have to be clear and they have to be understood. Now, that's also a role for the broker as well, to help you know where there are problems. A really good example is an underground storage tank exclusion. All policies have underground storage tank exclusions. The reason why is because insurers know that a lot of them leak. But you can have that exclusion removed. To remove it, you need specific pieces of information, and the insurers have underground storage tank application forms that you actually start to enter this information that will allow the insurer to understand, right, we are willing to insure that.
And have you seen an increase in claims under the policies?
Definitely we've seen an increase in claims. There haven't been a lot of increase through statutory liability claims. There has been a lot through civil liability claims. So complaints under nuisance, for example, is a common ground at the moment. The Environmental Liability Directive, or the Environmental Damage Regs 2009 over here, was expected to drive a huge number of claims. It drove an increase in the number of insurers in the market, but it hasn't yet resulted in a significant volume of claims coming through. Now, if you take a comparison with the experience in the United States, where they already have the natural resource damage legislation, it took 10 years for the first claim to come through under the natural resource damage regs. That claim was a flood event on an old mining site, and it actually picked up historical pollution and transported it elsewhere. I think we can see a lot of similarities to the UK with that scenario.
Indeed. Duncan, for my last question, what would be the 3 key messages for lawyers watching this webcast?
The first one is making sure you understand what the liabilities are, whether these are statutory liabilities or they're the indemnity. Understanding what is happening with them and where they're going is key to the process. The second one is making sure you've selected the correct insurance policy. Each policy, each insurer has a slightly different application and a slightly different interest in what they're going to insure. So you need to select the correct one. And to help you do that, the third bit is select the correct specialist. The specialist can help you select the proper policy, and it's not always about making sure it's the cheapest to get the best response.
Okay, thank you. So there you have it. Lots of examples where environmental insurance can play a very important role. So if you're advising on a transaction where there's a contaminated land problem, buying, selling, or redeveloping, we would encourage you to consider an environmental insurance solution. Duncan, thank you very much for sharing this with Lexis PSL.
Pleasure, thank you.
And thank you for watching.